We made 467% profit after Carvana reported earnings today. And part of the reason why we made more money this time is because we set this stock's price target at $70 a share. And as you can see, it ended up very close to it at $69 a share, even though throughout the day it went up to $76 and down to about $66. So in this video, we will use Carvana stock as a real example to explain how we decided which stock price to set as our profit target for our options trade strategy. Even if you don't trade options, price targets are important when you're trading stocks. You may have a stop loss price target to reduce risk, but if you don't have a price target to take profits, you may not be as profitable as you can be. As the saying goes, if you fail to plan, you plan to fail. So to provide some context for this lesson, last week on February 15, on this day, we published our trade strategy in this video, analyzing $21.9 million trade. And we found out that this wealthy investor who made this trade was expecting Carvana stock to go up after earnings, which it clearly did today with more than 32% gain. So this wealthy investor is even richer now. And that's why we follow the trades of the rich on this channel by analyzing unusual option activity. So if you missed our video, you can search for it based on the title here. And we'll put a link to the video up here if you have info cards turned on. And make sure to subscribe and hit the bell icon so you don't miss out on these very profitable trading opportunities. So in our video, we revealed our options trade strategy here. It was a butterfly strategy. And as you can see on this profit loss diagram, the stock trades at $69 a share. Profit is $215 per trade. And each trade cost $46. So if we do the calculations, $215 of profit divided by initial cost of investment, 46 times 100 is 467%. So if you followed our trade strategy, you would have also made 467% profit. If you want to follow more of our trade strategies based on the trades of wealthy investors, then go to our website up here. I'll put a link where you can learn how to gain access to the trades of the rich. So, how did we know to target the $70 price? Because that's what we set for our butterfly strategy, where we targeted this price by selling the calls on this butterfly option strategy. Well, if you watch the video again, when we analyzed the trade of the wealthy investor, this was their trade here. A vertical call spread. where they were buying the 45 strike call and selling the 70 strike call. Okay. And let's take a look at that trade again. So this is their trade here. Now notice that by selling the 70 strike call here, they essentially limited their profits. You can see that the profit line is flat here, right? Because on the y-axis here is profit. It doesn't go up even more, this line. If this price of the stock goes up to, for example, 75, you can see that the blue line is still flat. It doesn't slope upwards as in the case below 70. You can see this is a slope upward. But then once the price crosses 70, it starts to just level off flat. So we know that this wealthy investor believes that the price of Carvana stock is not necessarily going to go much higher than 70. Otherwise, why would they limit their profit potential, right? This is limiting their profits here, okay? They had a good idea that it was going to break the $45 strike price, okay? So their trade, if you recall, this was our trade. You can see it expires today. By the way, you can see here our 70 strike price calls that we sold, 2 of them for each of our trades. You can see why it's so profitable, because by selling them, we were able to collect and keep all of the credit, because we can buy it back for basically nothing now, because it expired worthless, because we never broke $70. We're under 70, right, at 69. So these options essentially expired worthless. We don't have to buy them back for a lot to close out of it, so we get to keep the credit. And that's why this trade was very profitable. And yeah, so back to the wealthy investors trade that we went over. That was on the May 17th, right? And as we explained, the 45 strike calls, you can see we had gone over those 21,700 contracts. You can see the open interest, they're still here, opened, and there's 70 strike calls as well, open interest. So by selling these 70 strike calls, this is what that investor was indicating. Okay, so that is a method on how we were able to understand where these price targets were for this wealthy investor. Just like a lot of financial analysts, they have price targets for different stocks, right? You see a lot of that in the media, where a financial analyst will raise their price target for Carvana stock or Tesla stock or Nvidia stock, and they'll either raise it, or in the case of Tesla, they may be lowering it. But this is why it's very, very important to keep track of these price targets, to have an understanding of what these wealthy investors are doing. What price targets are they targeting, right? Which price are they expecting it'll breach, and which price target do you think it will have a high probability of not exceedingly going further above? And that might explain why this price, even though it went up to $76, it started to come back down to that $70 price, right? So something to think about when you trade, all right? So you can go to our website to learn more about how to succeed in the stock market. We'll put a link to our website at the top here. And make sure to check out the video we published on February 15 when we shared our Carvana trade strategy. I'll put a link here. And as you may know now, it was a very profitable trade today because of this rally. Please smash the like button and have a great weekend.